Good morning, everyone. My name is David Gersten. I'm the Vice President of Sales and Marketing here at Bond Consulting Services. Welcome to our December 2016 Year-End Closing in Dynamics GP webinar. Today we've got two great consultants here to share some fantastic information. George Rios and Mike Zapp are both Senior Dynamics GP consultants with long-time tenure here at Bond Consulting Services. Real excited that everyone's participating in today's call. And again, it is being recorded, and we look forward to being able to share this out after the call. Thanks for joining. Go ahead, George.
Thank you for the intro, David. Good morning, everyone. We're going to be talking about, like David mentioned, year-end closing in Dynamics GP. So the first thing that comes to mind is what modules need to be closed. Now, we have 7 modules listed on the presentation, and that is not all inclusive. There are several other modules that need to be closed. But for our presentation here, we've only prepared for 4, the top 4 on the list there: inventory, accounts payable, accounts receivable, and general ledger. We have documentation relating to the other modules that we can provide to you. It's actually on a slide towards the end of the presentation. So we will make sure to stop there and make sure that people can either jot those links down, or actually we can even send those out after the call. So let's go ahead and continue. So the question usually, the next question that usually comes up is, when should I run the year-end close routines? For inventory, we usually recommend that you run that process at calendar year-end. For accounts payable and accounts receivable, we recommend both calendar year-end and fiscal year-end. For most companies, if you're on a calendar year, those 2 dates will coincide and you'll need to do this process once. But, it's not like that for every company, so you have some flexibility built in there to allow for those types of changes. And last but not least, we have the general ledger. The general ledger has a little bit more leeway than the other modules that can be closed at fiscal year end. But if you're not able to or not wanting to close immediately after the year end, you could do so anytime thereafter. The first module we will talk about is inventory, and actually Mike Zapp will be speaking about inventory, so I will hand things over to Mike.
Thank you, George. Good morning, and in relation to inventory, just wanted to let you know that this little section is also co-sponsored by Horizons Manufacturing and has added to some of the content here as well. So without separating that out, we'll go through the content. And the first thing about inventory is timing is everything, and you're going to see this theme throughout the presentation. Timing is important because at year-end close, processes should be closed as quickly as possible and as close to the year-end as possible to make sure that the information is accurate. And this is affected by a couple of different things. And why is this important? Transactions posted prior to year-end close are going to be part of that year, or the current year, if you will. And then any new transactions that are posted after the close become part of the totals for the new year. So the timing of which is affected by making sure that all of your transactions in the current year are closed and posted and finalized before you actually post any transactions in the new year. That's not to say you can't record transactions and keep them in batches, but don't post them if they're affecting things of the new year. So in January, you're not going to want to post any of your sales order or sales invoices or returns until after the closing process is complete. And if you were to post those totals would be added to last year's totals during the closing process. So I want you to understand that little break in time and why it's important to understand that. So a couple things, as I just talked about sales orders and sales invoices, these things do affect the inventory. So you'll want to make sure that you are completing your transactions in the purchase order receiving area and also in your sales invoices returns area for the current year before you close the inventory module. Make sure that the accurate totals are there, affected by the transactions as well. So what is actually affected when you close inventory? The beginning quantities and costs. So it does a tally and says, hey, this is my beginning number for the new year, and this is all about the quantities and the values of those items at that point in time. Smart list objects that you're looking through when it calls the, this year, last year type information and beginning numbers would be updated. So your smart list objects would be noted after the close, so they'll be clean, if you will, so you get a cutoff time, and they're kind of set in cement, so to speak. And then there's some data cleanup options that you have during the closing process itself, and we'll talk to those when we come to that slide in the closing window and we go through that. So what are some of the key factors? You want to get organized and plan well in advance for a physical inventory so that that process can go quickly and smoothly. You want to make sure that you've got everything put away in their bins or counting locations, so they're not out in the middle of the floor. People are having to run around in the warehouse trying to search for things and get them counted. If you've got lot numbered information or serial numbered items, you want to make sure that they're kind of segregated by their item numbers and by their lot numbers so they're not mixed in. So if somebody were to count a pallet of one lot number, they can assume it's all one lot and not mixed lots on the pallet, which could affect your counts, at least the counts by lot number. You might get the total quantity correct, but your lot number information or serial number information may not be accurate. So you want to plan for that, and that could take some time in the warehouse organizing that information. And we talked about lot numbers being mixed on pallets. Well, you should also consider that item numbers that are on a pallet should not be mixed as well, wherever possible, or be clearly delineated so that when they do the counts, they'll know that it's a mixed pallet, and they're going to have to make sure that they count all of the items that are on the pallet separately to get proper totals. Making sure that your count tags are properly printed in advance and put on their counting locations, and you have a master list of all of those tags that go out so that when the tags are actually counted and recorded on the counts are recorded onto the tags, that as you collect all of the tags, that you make sure that on the master list each tag is checked off so you can make sure that each counting location is counted and in, so you know you've got everything counted at that point. And of course you want to organize your people into count teams for efficiency and 2 or 3 people counts so that at least 2 people are agreeing with the total count before they move on to the next counted item, and they're recording that information on the tags as they go. It helps to eliminate a lot of recounting, etc. People have different theories on whether you want to actually tell the counters how many they should have. My personal experience is that if you don't tell them how much they should have, they count exactly what's there. Otherwise, they will tend to maybe say, well, I'm only supposed to have 100. Well, we'll put 100. And they don't actually do the counts. And let's face it, the whole physical count process isn't something that people really enjoy. It can be very time-consuming, and it is fairly costly to the company if you stop and think about it. You may even have auditors that are on site that are reviewing and watching how the count proceeds to make sure that it is an accurate count and they can sign off on the physical inventory and the value of that inventory on the books. So that's all about planning and organizing. And we talked about POs and sales orders. So you want to make sure that all of your POs are received. If you've got the truck at the gate, make sure those counts go into stock and are posted so that it updates the inventory properly before the year-end close. Now that could be before or after the counts, but making sure that if the items are in transition, they're clearly marked where they should be counted or not counted. That would be based on whether they're posted into the system or not. And that holds true also for your picked and packed items that are being shipped out. If those invoices can be processed through to update the quantities in stock, even if the truck hasn't picked them up, you can mark them don't count, so that if the invoice is posted, it's already affected the quantities in the system. And for that matter, if you need to count them, then they should be marked to be counted in some fashion, or at least everybody understands the exact status of everything that is in the warehouse. And then wherever possible, try and stop your inventory movement. So if you're in manufacturing, you're not going to want to be transferring from the warehouse into the production area while goods are being moved, and you're trying to count so that things don't get double counted, or you count it in production and then you also count it in the warehouse. You want to avoid the movement of inventory if at all possible, or have a clear understanding of exactly the status. And all of this ends up to be a smooth process that goes quickly. If you're stopping activity in the warehouse, that means you're not shipping anything out, which means you're not getting your AR onto the books as quickly as you'd like. So the process is important that we get this done efficiently and quickly and with the most accuracy. One of the things people forget at the end of physical inventory is an evaluation or an assessment as to how did it go? What things did we do right? What things did we do wrong? What can we change for next year or next count to make it smoother, faster, and get a more accurate count over time? So it's important to assess the results of your counts and making sure that you note those changes so that you can make those adjustments for the next time you count. And hopefully that will lead to a much more efficient process and a quicker process for the next count. So in the process, how do we close the year physically in the system? And there's a notation here for going to the drop-down menu at the top, selecting Tools, Routines, Inventory, and then Year-End Close, and the window that you see there is what will pop up. We had talked at the beginning of what's affected. You have some options here. So you have the option to remove discontinued items that have no stock. If you check that box, then those items will be removed from inventory as far as items go, so they won't show any longer. And it cleans up the system especially if you're in a situation where you're no longer intending to use that item and reactivate it in some time in the future. Sold lot attributes. Now we're talking about the descriptions that go into your lot category fields if your items are lot numbered and you use categories. So it'll clear out any descriptions that are out there as long as all of that lot category has no items that are attached to it. So if you've just got one item that is also sharing that category, it will not clear those attributes. This just cleans up some extraneous data that might be sitting out there. And along with that is the sold receipts and cost change history prior to a certain date that you determine that you want this information from this day backwards will be cleared. And actually, it's from that date forward it will remain the date prior and prior to that. So if you put December 31, December 30 and prior will be cleared. Just to be clear, the date that you put in there is not included. So if you want to clear everything in a given year, you'll want to put 1/1 in the following year and the prior year information, and any information prior would be cleared. What we're talking about is in the inventory receipts inquiry screen, you'll see a list by location or site of all of the items that have been received into that site and the quantities that have been sold in that purchasing layer. So if the item has been received of 100 and 100 are actually sold or consumed in manufacturing, then that line would be removed if it falls within the date restriction that you enter here. And for companies that have been around for a long time, they may have quite a substantial list of purchase quantities, and it also shows the costs there. So those would go away and clean up the list so you're not scrolling through lots of line items that you don't need any longer, and helps with efficiency in the system overall. And this is part of the year-end closing process. And then if you update the standard cost on items, if you're using standard cost, which is anything that is marked periodic, so FIFO, LIFO periodic valuations, we'll be using standard cost. If you check the box, it will update the standard cost from the actual cost or current cost, which is the last price paid or last cost to make. And then in the closing process, when you click the process button, it goes through the routine of locking down what that ending quantity is that is on the books at that point in the computer, and making sure that that balance or total is rolled forward into the next year as its beginning quantity, total, and value by item. So that reports are updated within the system. Any of the reports that show, and any of the smart list objects that show this year, last year, ending balance, beginning balance type information will be updated based on the closing process. And that's inventory in a nutshell, and we'll take questions at the end. George,
all right,
back to you.
Hey, thank you, Mike. All right, so next we'll dive into accounts payable and accounts receivable. Now, I like to group these two modules in the same category because the processes are very similar. So similar to the inventory module, timing timing is everything. So what that means is that all of the activity, similar to inventory, we want to get into the system. Everything that relates to the year that's being closed, you want to get into the system on a timely basis and do that posting for that activity prior to posting any new activity for the new year. So that's the importance of getting the two types of transactions set into the system. So anything that's 2015, such as in the case of this year, you want to make sure you get that posted and you get the year-end process run prior to posting any activity for 2016. So what is affected on the AP and AR modules? There are various reports on both sides. You have summary reports, and there are also smart lists as well as other summary windows that are affected. Effectively, the current year balances are zeroed out and moved to last year. It's not to say that if you happen to intermingle some of the balances across years, it's going to skew your numbers. You can also go into the smart list to query the balances, and also you're able to total up, especially if you have Smart List in Smart List Designer or Smart List Builder that goes and queries the totals, and it can create these yearly totals for you as well. So if you miss the year-end close, it's not really going to affect anything negatively in the system. So how do you run the year-end close in AR or AP? The processes, like I mentioned, are very similar. You go into the routines menu for the respective modules and you select the year-end close option. Within those screens, you have the option to select the fiscal year or calendar year. For those companies that have a 12/31 year-end, you'll just select all, and that's all there's to it. For companies that have a different fiscal year versus calendar year, then you have the option to close the year-end at the different intervals. So, excuse me. And on this screenshot here, I just wanted to show that we have a couple of smart lists. In this case, we have a customer balance smart list and a vendor balance smart list. So the year-to-date columns in this case are the columns that are being zeroed out, and as you can see, the last year-to-date balances are zero currently, but when you run the year-end process, it basically moves the columns from year-to-date to last year-to-date. Next on our list, we have General Ledger. The General Ledger close is more forgiving in terms of timing, and we have several steps that we recommend. Now, I know that I have backups listed there 3 times at the top, the middle, and the bottom, but that just punctuates the importance of taking a backup. It is less time-consuming to restore a backup than it is to have something corrected in the event that a backup doesn't in the event that a year-end close doesn't complete, which doesn't happen often, but it does happen on occasion. And when you do have to have those types of issues fixed, it could get very costly as it is time consuming. So we'll just go into some of the steps here. So first recommendation I have is that you check your settings on the accounts. So you want to make sure that you have your balance sheet accounts set accordingly, as well as your profit and loss accounts. The reason for this is because if there's a setting that is not correct, you may end up carrying a balance on your profit and loss account, which would be incorrect. You want to start every year at a zero balance on your profit and loss accounts. And conversely, on your balance sheet accounts, you want to make sure that those balances carry over from year to year. So that setting is quite important in the close process. The second recommendation is to have the badges all posted. All the badges that relate to the year being closed, being posted. If you happen to miss a couple, it's not the end of the world. The badges can still be posted, but it just keeps the balances cleaner. So let's say if you're looking for a balance to carry over after the year-end close, if you're looking at a GP report, the balances will remain consistent. If you're looking at a management reporter report that's looking at both posted and unposted activity, you'll be okay, but it's just cleaner to have everything posted prior to running the year-end close. If you have any audit adjustments or final adjustments that you want to include in the year being closed, you can do so. And similar to the last screen that we viewed, it's not the end of the world. If you have closed the year as of January 15th and you have a journal entry at the end of March, you can still close to the most recently closed year. We recommend running your payroll/year-end updates. These updates are not exclusive to payroll. There may be updates that relate to 1099 forms that may have had changes for year-end, and there may be also updates to tax tables relating to fixed assets. So this is something that you might want to run just to make sure that you're using the latest forms and tax rates. Here we have a screenshot of the backup screen within SQL Server. Now, not many people have access to their SQL Server, but your IT department certainly will have access. And if you need assistance in running a backup, we could certainly assist with that process as well. And here we have a screenshot of the trial balance. Now the trial balance, it gives us a way to take a snapshot of our balances, and here we have just a recommendation to run the trial balance just to make sure that you have something to look back on in the event that there are any discrepancies, or you just want to do some research to make sure everything came over as expected. And you could do the same thing with your management reporter reports, as those balances should also be reflecting the changes that you have on your trial balance. In the process of closing, you will want to make sure that you have a new year set up. As you're closing your last year, you want to make sure that you have the new year set up so that you're able to roll the balances forward. And last but not least, here we have the year-end close screen, which is also part of the routines menu within the financial series. And within the year-end closing screen, you just have to make sure that you have a retained earnings account. You can't get very far if that's not populated. You have the option to remove unused segment numbers, but you don't have to mark that if you don't need those items removed. If you have inactive accounts, you also have the option to remove them or maintain them. You can mark the checkbox there or not check the checkbox, but you have options that do become active when you mark the checkbox there to maintain inactive accounts. At the bottom of that same screen, you have the option to reverse the historical year. So in Dynamics GP 2013 R2, this option became available, so you are able to reverse a year-end close. That is something that I don't use too often, don't recommend using too often, but if you had to use it, you have the option, and I definitely recommend that you take a backup prior to doing so. And last but not least, you have the Close Year button there at the bottom right hand of the screen, and that process is now, well, you're able to gauge where the process is in the whole, in the scope of what it's doing. In prior versions, prior to GP 2013 R2, you didn't have that progress bar, so as soon as you click the button, you're kind of like playing this guessing game to see if something was really happening in the background, because you really had nothing to gauge whether something was happening. So you have that progress bar now, and luckily, you know, we still get the year-end close report, which tells you it is definitely done, and it still provides the information that you're used to seeing. It gives you your balances that are being rolled forward into the new year, and those balances can then be validated against your trial balance or even within your inquiry screens within Dynamics GP. So what actually happens in the GL is that, similar to what I mentioned about the posting settings, is that you have, or about the account settings, is that you have your P&L accounts being zeroed out into retained earnings, your balance sheet accounts roll forward, and your retained earnings are updated into the new year. And at the same time, you have your GL tables being transferred from open year to historical year, and also your fiscal years are updated and marked as closed. In this case, if we're running the close today, we would be closing 2015 and opening up balances for 2016. Of course, every now and then we do have issues that arise, and if you do run into any issues, there are fixes to them. And in this case, we have this frequently asked question as to what to do if you have a fiscal year-end close, or excuse me, you're on the fiscal year-end, and let me read that again. Do I have to close the fiscal year within the general ledger before the first day of the next fiscal year? Absolutely not. That's something that is up to you. And if you happen to wait a couple of days, weeks, months, it's not going to hurt anything, but just be aware that you will not have any balances on your balance sheet, any beginning balances on your balance sheet until you close the fiscal year. And next question that we're asked is, can I make adjusting entries after the year-end close is run? Absolutely. That is not an issue. You can post entries into the most recently closed year. And now with the GP 2013 R2 option to undo a year-end close, you can go back even further. Not recommended, but it is an option. And question 3. After I performed the year-end closing routine, beginning balances were brought forward for some of my sales and expense accounts. And that's very similar to something that we see quite often, and that relates to the posting options on the GL account. So it's not something that is insurmountable, but it is something that does come up on occasion, but it can be easily avoided if you prepare ahead of time and check the settings. So there are KB articles that can walk you through that process, and here we have an example of one. And there is a way to fix all of this, all of these issues in the event that something doesn't go as expected. But we recommend that you follow the year-end close processes, and here we have a link to those individual steps for the individual modules if you'd like to take a run at running the year-end close yourself. We are also available to help as well through our support department, and we have a support team that can and is willing to assist. David, do you have anything to add?
Well, first of all, I want to thank both yourself, George, and Mike for being great, knowledgeable consultants to our organization and being able to provide such great information to our customers. So thank you. I will open up the bridge for questions right now. If there are any, either go ahead and type them in, or feel free to, your mics are unmuted, and we just spend a couple seconds waiting to see if anyone's on there. We can back up one slide. One of the great things about it, and George mentioned that support is available to us, to you guys through multiple different ways. Support at bondconsultingservices.com goes into a great support queue. You can access our support form directly from our website as well under the support request button. And if you have any other questions about your account, or solutions that you have, or information around getting you copies of this deck as well as the recording and stuff, feel free to email me directly. We'll be glad to help you there.
We'll also be providing a copy of a document called Tips and Tricks for Physical Inventory, which goes into some recommendations and how-tos and why-fors to help you get through the whole stock count process a little smoother and a little quicker.
Absolutely, and that is sponsored by and co-authored by Horizon Software and Bond Consulting Services as well. So that will be ready when this recording gets sent out as well, and we look forward to being able to provide that information. Look forward to our 2017 calendar of great events and informational webinars throughout the year, whether or not it's about Dynamics GP or the new Dynamics 365 for sales opportunities as well. We'd be glad to share that information with you as possible. So we will keep the bridge open for just a couple more minutes. If there are any questions, please feel free to ask. If not, thank you so much, and have a fantastic holiday.